Take problem number 7 in acquisition of business. This is a problem taken from Reddy and Murthy. See, this is a slight typical problem. In the previous cases, we have solved the problem with one company is formed or one existing joint stock company is taking over the business of a firm or a proprietary concern. Whereas in this question we are given with the same old concept, one proprietary firm or a firm taken over by the joint stock company, and in the purchasing company, that is in the books of a joint stock company, the shares are issued, some of the shares are not paid, and those shares are forfeited and reissued. We have to calculate what is the amount of transfer from forfeited shares to capital reserve. That we have to do. Okay, so in that way, this is a slightly typical problem. See, in the question itself, it is given as the firm, the business was purchased by a joint stock company by started with the authorized capital and 1,75,000 purchase price, and that purchase price is paid, that is discharged in the form of equity shares worth 50,000 rupees, preference shares worth 50,000 rupees, redeemable debentures worth 30,000 rupees. Total purchase price is fixed with 1,75,000. Of that, equity shares, preference shares, redeemable debentures are issued, and the balance is what? That is taken as the cash. So accordingly, we are calculating the purchase price. Then also we are given with remaining shares. The company was, joint stock company was formed with 5 lakh as authorized capital, that is 2,50,000 for equity shares, 2,50,000 for preference shares. So 5 lakh rupees with the authorized capital. On that we are issuing preference shares worth 100 rupees. So 500 shares are issued for the purpose of this thing, that is purchase consideration, and equity shares at rupees 10 each issued for the purpose of that is 5,000 shares are issued for the purpose of this thing. What is that? Purchase consideration. Now we have to proceed with the entry. The vendor is Ram Gopal and Sons. That business is taken over by the new company. So the first entry is business purchase, it is given, and how it is discharged, that is also available in the question. So business purchase account data to Ram Gopal and Sons, 1,75,000, that we pass the first entry. And the second entry, as usual, various assets account data to creditors, to bills payable, to business purchase. Difference we are getting in debit side of the entry, so we have to take that difference as goodwill. Please mind it, in your textbook it is given as goodwill 42,900, whereas here we are getting 47,900. Okay, then next entry is how the purchase consideration is discharged, paid, so to the purchaser. So for that we have to pass a vendor account data. That means here in this question it is a Ram Gopal and Sons account data to equity shares 50,000, to preference shares 50,000, debentures, and that the balance amount is paid in the form of the cash. So that we are taking. The next one is point here given as remaining shares are issued to the general public for equity as well as the preference. On that, 600 shares at the rate of 3 rupees not paid for equity shares. Those shares are reissued, forfeited, after that reissued. Then we have to calculate what is the capital reserve lying on that. So for that, first we have to pass shares issuance entry. So bank account, when you are issuing the share, cash comes in, bank account data to equity share, total amount of equity share. On that, total amount is 2,50,000. on that 50,000 rupees worth already issued, so balance equity shares. On that 600 shares are not received, so we have to deduct 600 shares at the rate of 3 rupees per share. That we have to eliminate it, deduct it. Then bank account data to equity share 1,98,200, bank account debtor to preference shares 2 lakh rupees. That means total 2500 shares. 500 shares already issued for the purpose of purchase price, balance into 100 rupees per share. Then forfeiture entry, you know very well, forfeiture is debit share capital to the extent of the shares forfeited. In this case, 600 shares are not paid for equity share call. It is supposed to be the call. We have to presume that it is call. Then bank equity share capital account debtor to share forfeited account to share capital account. So total amount we are taking debit 6,000, credit forfeited shares 4,200. That means 3 rupees not received. So 7 rupees is received against that share 600 shares, and 2 equity call 3 rupees not received against 600 shares. That entry we are passing. Then we have to pass another entry which is called yes. Then after the balance sheet I pass the entry for reissue bank account debtor. How many shares you are reissuing? 600 shares. Debtor 2. Debtor share forfeited account debtor to equity capital. In the question it is given as shares are reissued with 20% discount. So 10 rupees is the face value, 20% discount. So reissued price is 2 rupees. So if you deduct 2 rupees from 10 rupees, so reissued price is 8 rupees. So bank account debtor 600 shares at the rate of 8 rupees or at 48, so 4,800. Then share forfeited account debtor to share capital 600 shares at the rate of 10 rupees. Then we have to calculate the forfeited shares. See, capital reserve. Entire forfeited shares of 600 are reissued. So straight away we can take credit forfeited shares minus debit forfeited shares 4,200 minus debit forfeited shares 1,200. Balance of 3,000 is capital reserve. That is amount transferred to capital reserve. Now we have to prepare the balance sheet. That you know very well. Equity shares, total equity shares. First 50,000 we issued, and then 2 lakh rupees we issued. Preference shares. First 50,000 preference shares against the purchase consideration, and then 2 lakh rupees we issued. Debentures against the purchase consideration 30,000 rupees worth debentures issued. Creditors, straight away that old creditors we are taking here. Bills payable also. Then in capital reserve, what is this capital reserve? Against the 600 shares forfeited and reissued, balance of 3,000 we are transferring it to capital reserve from forfeited shares account. That capital reserve we are taking in the liability side. In asset side, debtors, stock, building, all those things are given in the existing balance sheet. Goodwill we ascertain in the entry number 2 as balancing figure. Then cash balance, that we have to ascertain. Last line I marked the workings for cash. Opening balance is 4,500. On that, against the issuance of the shares, you are getting 3,98,200 by issuing remaining equity as well as preference. Then that 4,800 is against the reissue of shares, 600 shares, minus what the amount you are paying against the purchase consideration, 45,000. So balance of a cash at bank is 3,62,500. That you have to take it in the asset side. So this is the clear-cut example for essay type question. Of course, it's a lengthy problem. Clear-cut example for essay type question. So in that manner, you have to take this problem